But let's move on and let me welcome on board Sunil Bohra, EDN Group CFO at Minda, joining in on the show right now. Sunil, hi, morning. Good to have you on ET now. Just going through your Q3 performance, and we've seen a 20% growth in your top line. You've given a good guidance as well for the coming quarters. What segments make you confident and you think will contribute to growth?
Yeah, hi Aisha. So there are a lot of segments, we have been first of all agnostic to IC or EV engines. So there are a lot of products which are driving the premiumization wave, or there are a lot of components from the EV perspective which we have launched and we are the market leaders in the country, which are seeing a good traction. If you have to name some products which are seeing a very good growth, and we do expect it to continue for next 5 to 10 years, is your alloy wheels for pass cars, seeing significant adoption rates. When we entered this business 5, 7 years back, it was 17%. Today it is close to 45, 50%, and globally it is almost 90, 95%. So alloy wheel business will continue to grow. The second business which is seeing significant growth is our lighting business, specifically again for PV segment. We are seeing significant growth there, coupled with the market share gains and also the premiumization. We're moving from halogen to LED. The kit value is increasing significantly, for almost like 3 to 4x of what it has been. Then there are a lot of other sunrise products like wireless chargers, or even exports wise, the switching and seating are doing phenomenally well. From EV perspective, the business are doing pretty well. So there are a lot of factors which are riding on this, and we are pretty confident that what we have delivered in last few years, we should be able to continue that for next many years to come.
Sunil, you're talking about confident visibility next 5 to 10 years from now. Do you have that kind of order pipeline already, or at least visibility on the same, to be so confident about your numbers?
Absolutely, Aisha. So what gives us confidence is the business we are in. You know that whatever business starts today, or whatever business you get today, starts with 1 or 2 years forward in terms of development cycle, and it links to the launch of the vehicle of the OEM, and then the product cycle is like 4 to 5 years. So obviously the joker in the pack, or the only variable factor, is the industry volume, which is not in our hand, and that's why we never give guidance on revenues. But we are pretty confident based on the businesses we have been securing. We are confident of gaining our share of business. We are confident in terms of our new products. We are confident in terms of new expansions. We have been working aggressively on expansions. There are like 8, 9 projects which are currently under construction phase. So next few years, we are very, very confident of our growth. Obviously, volume is something which we can't comment on. But as we always say, for long term, our target is minimum to give at least 1.5x of the industry growth. If you see historically, we have done much more than that. But maybe one can say conservative, but I think that's the long-term goal we have. We don't look at quarter to quarter, definitely. We see on a year-to-year basis. And the guidance which we have given, we're pretty confident of 1.5x industry growth. At least we should be able to deliver in medium to long term.
Mr. Bohra, I was just looking at the commentary coming from your side, from the management side in the conference call. And what excited me is that, one, your overall margins are actually, the trajectory is going higher, because obviously the product mix is changing. And you are, of course, plowing in a lot of cash flow to your capex. Are you telling me that in the next 4-5 year period, your, say, 14,000-15,000 crore top line, almost 1,500 crore EBITDA kind of run rate could, completely change a whole lot? Because bulk of your new initiatives towards the new products, etc., will actually come in year 3, year 4, year 5. Where can it change the complexion of your company to then?
Oh, it can significantly change the complexion, as I said. First of all, while we don't comment on volumes, we are pretty confident of the long-term growth of the country. There are various forecasts. People say that the India PV market, which is currently 4 million market, will grow to 7 to 8 million market in the next 7-8 years, right? Or the 2 million market, which is 17 million, will go to 30 million two-wheeler market. So definitely quarter on quarter is very difficult to comment. There are both sides of the story in terms of next year's growth. But if you see long term, we are in a long-term bull cycle in terms of industry penetration, right? If you see the adoption itself, the pass car adoption in India versus some of the other developing countries versus developed, we are a fraction of that. So there is a huge potential to grow. And with that potential in mind, we know that while we have multiple facilities in India, we have been running almost close to capacities, and we have been working to get land in advance. We are working with the government to see how we can get the incentives under the mega policies, etc. So we actually just bought a 86 acre of land in Pune. We just bought around 37 acre of land in south in Krishnagiri district near Hosur. We are in process of getting 95 acre of land allotment in Haryana from HSIDC. So we are working very, very aggressively to see that the next phase of growth, we should be able to capitalize in a timely manner. We know we had some hurdles in past in terms of getting land on time. So we are preparing well in advance to capitalize on the long-term growth trajectory as we move ahead. In terms of products also, not only industry volumes, we are seeing a lot of premiumization where if I have to take one or two examples, I just took like the wheel size today was 14, 15 inches wheel. Now, when you move to SUV, the wheel itself will grow to 17 to 18 to 19 inches wheel. So that itself sort of gives you 40, 50% growth in the kit value. Then the number of cars are increasing, then penetration increasing, then there is export traction. There are multiple factors which gives us confidence that we should be able to deliver what we have been communicating on.
So can we then assume that even when it comes to your overall margins, that will head to about 12 to 13%?
So definitely in long term, that is our endeavor. So in short term, you know that we said this year our guidance was around 11%, and we are in line with that. Hopefully this year we will be able to meet or maybe do marginally better than that on a full year basis. Our next year guidance also is in line with that. In medium to long term, yes, we do expect some operating leverage to kick in because initially, as you will appreciate, we are in a phase of expansion. We will have another 8-10 plants getting commissioned in next 12 to 18 months. So initially, those new plants definitely don't add to your accumulate to your profitability. In fact, they are a bit of a drag, which our standard cycle is we see third year of operations where we expect the plants to deliver the normal profitability. So because of which that all is baked in, we are saying in short term, maybe a year or two, maybe with around 11.5% in a couple of years, and then maybe definitely we target to move north with the advantage of operating leverage as the revenue continues to grow.
All right. Thanks very much for your time, Mr. Bohra. That was Minda talking about the numbers this quarter and how gradually there could be a hockey stick kind of a shape where the numbers could actually catapult over 18-month period.